Hello, good evening, everyone. Welcome to Property Zone Live. I'm Sean here. I'm the moderator for tonight's session. Tonight, we are very honored. We actually are able to invite Jennifer Ong. Jennifer Ong is our guest speaker. Can you say hi to the audience today, Jennifer?
Hi everyone.
Okay, Jennifer basically is the managing partner for EAS Consultancy. Not only that, he basically has worked for one of the big four firms and also worked for a corporate listed company for the past 9 years. So she has a vast experience in answering some of the taxation questions you might have. She is also a chartered accountant of the fellow of Association of Chartered Accountants, which is NCCA for the short form. And she's also a member, chartered accountant of Malaysia Institute of Accountants, MIA. Okay, so she's an approved company secretary, signing partner, and also she's a proof GST tax agent. Now, first of all, again, thank you everyone for turning in. I hope everyone is safe at home during this CMCO period. And today's topic is very simple: taxation and property in short. So why tax? I think almost none of us, except the government department, like the topic about taxation, right? Nobody likes about tax. But just like what Americans say, death and tax, these are basically the two things we cannot run away from our life if there's a government in charge. So here we are coming to the taxation. I think it's better for a one of us to understand the tax better. So today, our target audience will be either from a property owner, whether you are a buyer or investor, and also from a property entrepreneur, if you are running a business in related to real estate. So basically, these are things we want to find out how we can actually instill and share some knowledge from Jennifer. And perhaps we can actually better to equip ourselves with knowledge so that we can plan along this for us and as well for our customer in the future. So without further ado, I will actually come up with a few questions that are commonly known. But if you have further questions that you want to ask, you want to share about it, I can always type in the comments here. I can share more with you. Hi, Jeff. Jeff. Okay. So, Jennifer, can you share with us as property investor, right? So a lot of times when you as a property investor, you always look for what are the good property, how much is the PSF, and whether how much loan we can get. But we always, not say always, sometimes some people neglected about the things to watch out for, and what are the common mistakes made by these people in terms of taxation wise. Jennifer, over to you.
Yeah. Thank you so much, Sean, for introducing me, and thanks for having me. So try to squeeze as much as tax knowledge from me. So I would like to give more and more tips to all the audience. So those that who came in, you can share up. Okay, so back to Sean, your questions. So what is a common mistake? Let me think. The top 3 mistakes normally is done by the investor. First is normally they didn't prepare a very good financial records. What does it mean, right? So for the personal, of course, they didn't declare the income tax, which is very a bad financial record, or maybe they're declaring into the wrong form. So this is really the top 1 mistake that made by all the personnel. Then for the company-wise, they didn't prepare their own financial record properly. So mostly it's because of the cash business, you see. Sean, just like that, every day they receive a lot of cash. But then, if they didn't bank it into the bank statement, today you walk into the financial institute, you want to tell them how much is your revenue. But they look at your bank statement, just 1 or 2 pages. So, but you tell them that, I'm making 100 and 200,000 profit. But which means that your record doesn't drive what's your statement. Same go to personnel. Income tax is actually your report card. If you didn't maintain your report card well, when you want to buy a property, makes sense if you go to a financial institute, say, hey bank, I want to borrow some money for the properties. Then people might thought that, what is your source of income and how much you are earning? You don't have that proof of record, you see. So that is really the top 1 mistake that made by all the investors.
not keeping the financial record properly in terms of taxation wise. Okay.
Exactly. So for the personal and company, so everyone just to take note. Maybe the top two is for the didn't monitor the repayment schedule well. So just like I think everyone heard about secrets,
Yes.
CTOS, and some of the CBM reports. So this all is actually the financial report. It doesn't mean anything, but it's actually govern your repayment schedule. So some of the
Okay.
people, I think most of the people, not some, most of the people busy making money, right? Busy making
Yeah.
money. But then just let you know when you're busy making money, you still need to rest. Still need to sleep. And remember to make your payment on time. Because some of the commitment, like the car, like the housing loan, so maybe you might think of, oh, okay, I will make payment later. But sometimes you just forgot. So when you come to the apply for the loan, so you might have some black dot on the secrets report.
Also, for
So
example, in this case, we call whether it's 1 or 2, right? That will
yeah,
indicate a black
correct.
spot. Okay.
Exactly. So the black dot is like 1 or 2. But the black dot doesn't mean that you cannot get any loan. Just it will take slightly longer time. Because of what? Just like just now I mentioned, secrets all is actually your one of your repayment schedule. Yeah. So bank might need to think of they want to confidence on you, but your repayment schedule slightly make them a little bit worried. So they might take longer time to observe you before they give you the loan.
Okay. Okay. All right.
So
How about the third
just
one?
third one is you never plan of any property type or any property price that you're going to buy. I think this
Okay.
one is there a lot of time we follow the feeling, you know. Wow, this property nice, I want to buy. Hey, this property also okay. The destination location wise is everything okay. So I want to buy. But do you plan ahead of what kind of property? Because of what? Just let you all know that actually different properties, commercial and residential, got different percentage of calculations. So just give
Okay.
an example. Let's say like residential property for personal, you can own like two, and now actually it's three properties. You can get the maximum 90% of the loan.
Yep.
Yeah. So for commercial, like company wise, they actually can get better loan in terms of commercial rather than residential. So if you can take a step for ahead, plan of what type of property you want to buy, so actually you can better plan of your company or personnel. Just like I say, personnel mostly is towards residential property. And for the
Yep.
company, is more towards a commercial property. So you might need to plan ahead of what type of income towards company or personal before deciding what type of property to buy.
Okay. Okay. So thank you very much for the feedback. I think to sum it down. So one of the things is I always keep track of your repayment requirement. Make sure they pay on time. Always have a clear plan ahead of what you want to buy because commercial, residential, and also buying individual name, buying under company would have differences in terms of cost pricing is different. Second thing, the loan margin is different. And the third thing, the loan tenure will be different. Residential, you can stretch up to 35 years, but in commercial, our rule of thumb is, we look at 20 years repayment. So the repayment installment amount will be higher. So need to plan ahead, and mainly because of that, right, Jennifer? So let's come to the second one. That will be of interest of somebody who basically owning a property as an investor and renting it out. Because when you rent out, every month we see, let's say you rent out a property for 3,000. Okay, so minus out the agent commission for 1 month, you basically getting 11 months, right? Let's say get 33,000 in a year for your yearly rental income. A lot of people happily, but we all do know that we need to plug the rental income as part of our personal income. Is it correct?
Right,
But
exactly.
there are certain things we can actually deduct out. So what are the things we can actually knock off? For example, loan interest, so on and so forth. Can you elaborate on that so I can share with your insight, Jennifer?
Sean, I think you must be very familiar with the rental income. You must have a lot of property. So what you say is just right at thought.
Okay.
Right. So maybe I can share some of the yes, like Sean mentioned just now, all the rental income you must need to declare in your personal tax. So this is considered one of the passive incomes. So before deriving for the income that you need to declare for your rental, a lot of expenses you can actually deduct. So like just now, Sean mentioned about loan. Yes, the loan interest is you can able to deduct. So, but then you need to maintain your bank loan statement, because only interest part then is actually deductible against your rental income. So, and
Okay,
also,
Jennifer, just let me stop you for a while. I think a lot of people, for example, myself, I also just realized that not too long ago, every year the bank will send you a statement just on the interest portion they actually incur based on the loan. Let's say you have 3 houses, you have loans. The bank will send you each one statement for each loan and tell you the total interest incurred for that particular year. So they actually split out, the principal reduction portion as well as the interest portion. So we just only focus on the interest portion and we can deduct out from our rental income. Is it correct?
yes, exactly.
Okay.
So you can actually get it from the hard copy, or you can actually now very easy for you to retrieve online. Yeah. So you download the loan statement, you can see very clearly what is the principal portions that you pay. Let's say 2,500 is every month installment that you pay. So from the loan statement, you can see, oh, out of 2,500, maybe on 1,900 relates to the interest. It makes sense. So the 1,900 only can deductible against the rental income.
How about management and sinking fund? Yes or no?
Yes. So that is the monthly commitment that you need to pay, right? So yes, the monthly commitments, such as the sinking fund, such as the quick rent assessment, or some of the management fees, yeah. If you pay, actually that one you can deductible against your rental income. Not to forget some yearly, such as fire insurance. So that one actually also can be part of the deductible expenses. So sometimes in and out, when you rent out your property, you will do some repair and maintenance. Yes. So the repair and maintenance actually can also be deductible against the rental income. In short, whatever rental income that you receive, just take a step, go and collect back whatever rental expenses related to the rental income. So like just now I say, interest, management fee, assessment fee, quick rent, fire insurance, and all the repair maintenance, all these costs actually deductible against the rental income.
Okay. So one quick question, Jennifer. Let's say if I have collected rental 3,000 minus the agent commission, I have paid 33,000. Okay. But if I work out the loan interest, I work out the assessment fee, utilities, everything, management fees, is more than 33,000. So inside my personal income tax declaration form, whether it's B or BE form, do I just put 0 there?
Yes, you need to leave it blank. But then when the LHDN, which means our income tax authority, when they ask you, you must stand by your so-called assessments analysis. You need to prove then that why your rental income, the top tenancy agreement, let's say just now your case is 30,000. Okay. Then after that, what is the expenses that constitute more than your rental income? So you need to stand by all the analysis.
The golden question is, sometimes as an owner, our tenancy sent out for stamping. How is it easily be traced by income tax department? No, does it mean that every tenancy agreement being stamped, the income tax can easily trace if they want to, or is by default inside their system, or they actually have to do some step in order to retrieve?
A very good questions. Then is now go back to where is the stamping office of all your stamp duty for the tenancy agreements? It's actually in LHDN. So actually our HDN able to trace everything the stamp tenancy agreement. So you cannot run it away. So what you can do is whatever the stamp tenancy agreement you need to declare, but just to collect all the expenses such as the renewal cost is very important. Some of the people that might think of renewal cost because every month I already keep track all my expenses. The renewal cost such as the renewal of the legal expenses or legal fee or some stamp duty, that one also part of your deductible expenses.
Okay, second question, just thought of, I think as many property owner, okay, it's split out to portion. The first portion is, I met up with a bad tenant, right? He pay me 3 months, and after that he skip 2 months, all this thing. So in out of the 1 year, the monthly rental of 3,000, I'm only able to collect 7 months out of the 12 months. So does it consider 7 months of rental for me that year? Or how is it?
Correct. It's only actually the 7 months. Actually, it's the active income part. So which means that whatever rental income that you collected will form part of your rental income.
Okay, so basically now if we are under, let's say, the loan moratorium CMCO period time, because a lot of tenants are asking for reduction as well. So sometimes whatever is stipulated is 3,000 in tenancy agreement at the beginning of the year. Like when it runs to CMO or MCO time, tenant asks for reduction. So we use the reduction as our actual income for that particular year, right?
Yes, exactly. So you just have to declare whatever rental income that you have received.
Okay. So now we actually talk about that. What are the things we can do? And tax benefit as a property owner. Just now we told them what are things can be deductible under your rental income to minus out from the rental income that you collect. But what are the tax benefit that usually forgotten or omitted or neglected by property owner, whereby here you want to highlight to everyone so that everyone get a clear cut. As I think many of us are, Joel, I know, Nicholas, I know they are all property owner here. Some of my colleagues, some of the people that I know from public. So I think they are interested. As a property owner, okay, they told me that rental I collected, I can use some of the expenses and minus out from it. But what are the others tax benefit we are not aware of that you want to share with property owners here?
Okay, so good to have a lot of property owner here, so can benefited you all some tips. Actually, the one of the tax benefit that a lot of people that actually are forgotten or omitted is all the renovation costs. Have you thought of the renovation? You're so happy because you got the key, you want to renovate. Then renovation is a very so-called tedious work because you need to engage the technician, electrician, furniture, this and that. So it's a lot of a long process. So all these renovation costs, right, you can actually offset against your so-called deriving the RPGT. Let's say today you sell a house, right? So the purchase price and the selling price, you know, because let's say you sell at 500,000, you purchase at let's say 350,000. So to be fair, you need to pay 150,000 RPGT, right?
Yes.
Yes, but then just bear in mind, before you sell out, have you renovated the property?
Normally, yes.
Yes. So the renovation cost actually can be deducted before you derive the actually amount of RPGT that you need to pay. So all the renovation cost is the things that, yes, it's very lecture, it's very small amount and a lot of invoices, but keep it because it will save you from RPGT. And RPGT now, just for knowledge, last time, more than 5 years, right, actually you don't need to pay RPGT. But now, even more than 5 years property, when you sell, for the personal, you still need to pay 5% of RPGT. So keep all the renovation expenses with you.
Unless you sell the property from now on until end of next year, there's a tax exemption for RPGT. But I think always good to keep that in mind that if you actually incur any expenses, if it's maintaining the house, it's actually help to keep the offset from the rental income. But if it's enhance the house value, for example, the renovation, putting the kitchen cabinet, adding the awning, they will actually add value to the house, and they will actually help to offset your RPGT, right? Reduce the RPGT by incurring the cost. Thank you very much. I think Xiao Xiao have a question. Xiao Xiao Tong is if I attend. I think what she mean by if I'm the landowner, I'm the landlord. If my rental is received by cash, how should I treat it in terms of my income tax declaration? I still have to declare it, right?
You still need to declare because income tax doesn't look at what kind of manners that you receive. You want to receive in cash or bank transfer. As long as you got a stamping tenancy and you receive the money, so you need to declare it.
Yeah. I think, Sasa, I think to add a little bit about if received by cash, I think if you plan to buy more things and this rental become part of your supporting income, yes, I think definitely to declare it basically falsify and actually justify your rental income so that when you want to buy a property by getting a loan from the bank, at least it's there. Okay? And Stone My Mind. Okay, Stone My said that more than 5 years all document goya. I think that we actually have a discussion with Jennifer. I say when income tax come, all document is your duty as a income taxpayer to keep all your documents for 7 years. That's your duty. That's our duty. There's no argument with that. All right. So Goya, everything is alasan, is an excuse, will never be accepted by
And then
LHDN. But
to scan online. You have to store it anyway.
uh, okay, wow, Suwan is very good. Thank you very much, Suwan, for summarizing and actually rephrase what we say in a very simple yet easy to understand format. Okay, keep your remuneration receipt also to save you from RPGT. Now we have come to question number 4, but before that, oh, the question coming in. You're able to see the question, Jennifer?
Yes.
Can you see there's a comment, private chat and comment. Comment is on the right hand side. If you click the comment, you'll see the live comment from the audience. You're able to see.
Yes, I'm able to see.
Ivan, for example, renovation cost 30,000 in year 27. Then the unit is sold in year 2020. Can the 30,000 be deductible for RPGT? Now, if it's an example, is okay. Let me add a bit on this first. If your unit is sold before the exemption came in, right? Of course, you will use the renovation cost 30,000. But of course, it will also depend on your buying price and selling price. If your buying price and selling price is the same or lower, you're making a loss. Of course, you don't have to resort to renovation cost of 30,000. But if you buy a 350,000 and it's sold at 500,000, let's say at the beginning of the year, right? And it will still attract RPGT. Yes, the renovation that incurred 3 years ago will be part of the cost. It will add to your 350,000 purchase price. It become your base cost. You want to add anything on that, Jennifer? Yeah.
Exactly, Sean. So back to the Ivan question. Yes, the renovation cost. If you purchase the property, after that you do the renovation cost. All these renovation costs actually added into your purchase price. So indirectly mentioned that you actually earning lesser profit, then also paying lesser RPGT. So keep all the renovation costs. It's useful.
Sorry, Jennifer, no offense. I know this is your expertise in RPGT, but when it comes to RPGT, I like to share a bit more. I tend to share a little bit more because there was one thing I was arguing with LHDN in regards to the CKHT 3A, which is the RPGT. I went to the LHDN for 7 times. Okay, so I get actually a lot of input from the LHDN people directly. So they basically give me a lot of input that we never thought about, and something that we thought is true, found out is not true. So that I can actually add a bit of what I've learned from going 7 times to HDN and share a bit of experience here. And by the way, just to dispel the myth, when you go HDN, no coffee served. Okay, a lot of people say, go HDN and drink coffee. They don't serve you coffee.
No good policy lah, Sean.
Okay, so let's move to the next question. Now we actually talk about taxation wise for all the property owner, whether you are bought it for own stay for a few years, selling it later, or you should bought it as an investor, having it for rental income. But at the same time, we have a lot of people. I see some colleagues, some people that I know from working in real estate industry. They want to know a little bit more. What are the expenses? Okay, that are deductible for property entrepreneur. For example, as property agent, property negotiator. What are the expenses can be deducted out from their active income?
Yeah, Sean, I think this is your question, right? As a property agent. Yes, actually, what I can say, all the agent actually is the mini own boss lah, huh? So meaning that they sell all the property, meaning that they actually incur some expenses before they actually can manage to sell the property, such as traveling expenses, petrol, parking, and also some of the entertainment expenses, makan, and also the repair and maintenance of your car, and also some telephone bill. Actually, all kind of these expenses is you can keep it for your expenses to deduct against the commission income, so-called you receive from selling the property. And also, not to forget, sometimes festival, Malaysian got a lot of festival season, Chinese New Year, maybe you need to give some hamper, you see, or maybe you need to prepare some diary book for all the gift to customer. All this actually you can keep it as a record because actually will be all deductible against all the property agents.
Okay, just questions. I think some people are highlighted. I have personal experience like what I mentioned to you. Sometimes the receipt we receive from whether it's F&B, entertainment, or from petrol station. No, it got faded 3-4 years later. So sometimes now with use of credit card, the credit card statement they stated what are the F&B, for example, the restaurant they have visited, the petrol that we have paid, the touch and go we have talked about whatsoever. Does income tax accept our credit card statement as a proof of receipt or not?
Okay, so this is a very general question. So which means that, like, let's say petrol receipt mostly is you will get faded sometimes, right?
Yes.
So at the end, so LHDN is just back to us as a taxpayer, because now it's self-assessment. So which means that whatever you pay is deemed to be correct. So which means that all these records, right, actually is part of your so-called expenses receipt that you need to keep. But because of the credit card statement, you cannot see the location. Because of whenever you serve the existing clients, all the entertainment receipts you can claim as deduction. Just per se, let's say you are selling all the property in Seremban and Klang Valley. Suddenly you incur some expenses in Johor Bahru. So without having physical invoices itself, only based on the credit card statement, LHDN may challenge your deductible expenses. So they need, anyway, what my suggestion is, credit card statement is good enough, but it's better for you to scan all your official receipts. So which means that official invoice, the small invoice, you having the duty to keep all this in place.
Okay. Well, EJ Sim asked a question, can all rent to be postponed payment during the pandemic crisis? Sorry to say that we are not in the authority to decide on that. Of course, if we are, we actually want to call for all this. But hopefully we also get some good news for the post-mortem, the moratorium. The moratorium period will be extended or not, because we are looking at the possible EMCO or stricter CMCO that's in place at the moment, especially in Klang Valley. All right. So
but
number
I just
5. Yes,
I just add on to your question just now about the some of the government's policies, right? So yes, it's not that up to us to postpone each government policy, but actually government do give out a lot of subsidy during this pandemic as well, especially during this COVID-19. So I can share some of the government subsidy actually given by the all the tenants and also all the landlord, you see. So first is, during this COVID-19, if you heard that, those that landlord who provide discounts to their SME tenant, they actually able to get some special relief.
All right.
So
Jennifer, before sorry, not as per our discussion just now, you say if people who understand wanted to know more about something, you will have a slide to be shared, right?
Oh, no worries. So whoever that comment, you need the slide, I can give out the government subsidy. I mean, some of the notes lah. At least you are having something on your hand. No worries. I can prepare for you all.
Thank you. Thank you.
So there is a lot of government subsidy actually given out during this COVID-19. One good thing is about the special relief given out all the SME tenant. Second is actually a lot of so-called interest part is actually stopped, and also some of the landlords, they actually provided a lot of assistance to all the tenants, including government. So let's say they're given some deductions of the rental if you owning the government properties. Renting the government property, so they're giving a lot of discounts and also incentive on this.
How about personal income tax? What are the things that as just a normal income taxpayer are enjoying now in terms of in view of the pandemic?
Okay, so this one, let's say I give you an example. One of your, let's say Sean owning a lot of property. So Sean own one property that actually rent it to one of the SME. So let's say monthly of the rental is 1,000. So if Sean, you as a personal, if you declaring income tax, you must declare full 1,000, right? But the government saying that if today you give 30% discount, which means that it's 300. So by right, you need to declare 700 rental income, right?
Correct.
But they give you further deduction. So which means that 300 times 2. So which means 600 600 relief. So you only need to pay 400 rental income. Yes. So this is all the benefit that given to all the landlord who giving more than 30% of the discount to SME tenants. So it's a very good news.
Okay, good. I think there's tip of the iceberg of the what you're going to share in the slides. For those of you who are interested, whether you or your family or people you want to know more about how can we benefit in terms of taxation in view of the challenging time, type I want. Okay, I want. So we'll pick you up and we'll forward the slide shared by Jennifer to all of you over here so we can benefit from the insight. So number 5. This is not a secret, but many people, right, that we know, you want to avoid paying more tax, right? To be true, you put things in a simple way. When paying the tax, when the time comes, every single cents, every single dollar paying out, it's like we feel that it's the slash on our flesh. God, people want to avoid that, right? You feel that the less you pay, the smaller the wound, correct? Wow, you see how the good response, everybody all want a piece of sharing. So don't worry, for those of you who actually put in a comment here, you will actually, we will share, we get the slide from Jennifer and we'll share it out to all of you. Okay, so now to know that, come back to the question, people try to avoid paying tax as much as possible, but everything has its consequences. By paying less tax or under-declare the tax, they also limit their future potential earning capacity from other places. Would you like to elaborate on that, Jennifer?
Yes, actually, this is theoretically yes. I am agree that actually some of the people they always say they want to avoid more taxes. But what my suggestion or what my advice is that I always say ready your umbrella before the raining. Yeah, so which means that you need to, even though you are so-called, I don't want to pay tax, but then indirectly you are actually evade the tax and actually lower down your source of income or so-called income that you declare. So, and especially for during this pandemic, a lot of company or personnel actually having the capability to get loan. But because last time they always like, oh, I don't want to pay more tax because very I need to pay some taxes, right? So, but then during this COVID-19, they fail to get the loan. Actually, they're able to get the loan, but they fail it. So I feel like very wasted because you didn't prepare your thing. So what my last piece of advice is that you don't avoid or evade the taxes, but you're more on planning on the taxes. There is a lot of way to plan for your tax, even personal or company. Don't try to avoid it because avoid it may come to you at the adverse impact. Yes.
Yeah. So I actually in how should I say, to summarize the point that shared by Jennifer, I actually want to share one story with you. The people I actually spoke to, he actually, as a normal person on the street, he tried to avoid paying as much tax as possible. But because from start, he limit himself, not able to, by paying less tax possible, he limit his lending capacity from the bank. Even though he want to see the property that he likes, he's not able to get the loan that he wants and also to buy the property that is desired. So this is not just one property. Okay, compared to another person that I know, he pays his first tax. He actually had a first batch of the money, the income that is actually clarified, accepted by the bank. When he first buy the first property using the first income, declared to income tax, get acceptance by the bank, he make money on the first property. And the first property, he can use the money and invest 2 other property. So the things become a compounding return for them. So imagine the first tax that you pay is painful. It's always painful. But if you're able to get you the opportunity to buy few more properties in returns, one after another, I think that is a small price we need to pay in advance, the beginning, so that we can enjoy a fruitful return in the transparent way, if I can put it, okay?
Yes.
So last but not least, you can see all I want coming in already, okay?
No
So
worries.
I think this is
all flat for you all.
thank you again, Jennifer. So last but not least, okay, this is I think affecting to every one of us in a way, directly or indirectly. I think as everybody knows now, in view of the pandemic, central government, central banks in all around the world has been trying on two measurements to cope with it. One is called fiscal policy. The other one is called monetary policy. Monetary policy basically, the bank is reducing the interest rate. The bank is trying to reduce the statutory reserve ratio by pumping more liquidity, credit into the market. So, but interest rate drop has its limit, right? It cannot go below zero. Even it can go for negative, but it's just a short margin for a short period of time. So the next thing you're looking to for the bank is actually the fiscal policy, right? So one of the fiscal policy they have is increasing the threshold of their debt ratio towards their GDP. Okay, so I'm just gonna go through this technical thing very quick. But at the same time, what the government really want to do, they want to increase their tax revenue. So one very hot talk in town is the government plan to bring back the GST. So you being a qualified GST tax agent. So the good question is, first, how likely is going to happen, right? Or what the tax on rate going to be? So what you heard, because you definitely have longer years than us being in the line. Second thing is, how prepared you think we are in terms of operation-wise, in terms of financial capacity of all the SME, all the company owners are facing at the moment. Are they prepared, for the GST to come back?
Sean,
Yeah.
You really put me into the speculations position already.
Not speculation, but based on what you have heard, what do you think about the chances of coming back GST?
Okay, so whatever I share later will be just my personal opinion, because actually government didn't announce anything yet, but just so for the sake of a discussions, yeah, it really just come back. And also actually I can heard some rumors as well, so actually parliament is drafting something, but of course it's just all based on our assumption and speculation. I heard that actually it will reduce the percentage of the GST, and also actually it will reduce the taxable scope. So which means that few of the actually taxable item now become not taxable. So it's possible to happen, but if really happens, I think it will reduce the rate and also reduce some of the taxable scope. This is what based on my speculation. Yeah, don't quote Jennifer on this. And also in terms of all the businesses, right? So what I think that all the businesses is actually not a fresh new concept, yeah, for GST. Actually, more people already get used to the GST. But if really it come back, I think mostly it's on the operational side that businesses need to prepare. So businessmen actually can handle it well. So because GST not the first day, but then they just need to iron out some operationally, such as the GST system, right? We need to get input, output tax all in place, and all the administrative part, invoices. You need to issue the tax invoice, and what is the criteria for you to do that? And also, the last but not least, the declaring of the GST. So which means that GST return, you need to get some manpower and some consultant to advise you on that. So if really come back, I don't think it will be a very much surprise for everyone. Just I think everyone need to get ready on the operational thing in order for it to kickstart. Definitely, I think government will give some implementation time lah. No worries lah.
Okay, thank you again, Jennifer. I think we don't want to hold you too long for the night. On behalf of IQI and on behalf of all the audience in front of phone or in front of your computer, we want to extend our gratitude to you again. Thank you very much. And for those of you who have further questions, you can post it in the comment. We can see it because Jennifer will be able to see it. Or you have a chance, you want to PM or ask direct question to Jennifer or EAS consultant, I think you'll be able to do so also. All right. How they can reach you? How can they reach you, Jennifer?
Yes, you can go to my EAS Consultancy on the Facebook. You just search type EAS Consultancy. So you actually have the message box there. You can PM our team, and our team will actually reach you by sending you all the slides for all those comment I want. So my team actually will gather all the slides and send to you all. So because sharing is caring, so we hope that everyone enjoying this. These sessions. Yes.
Okay. So with this, thank you very much. Everybody have a good night. Stay safe. Stay home. And thank you again, Jennifer.
Thank you, Sean.
Bye bye.
Bye.